Welcome to the Freedom Culture. All right. Today, I just want to briefly go over a clip that came out of the semi-annual monetary report by the Fed held in the meeting this past Tuesday. The semi-annual monetary report is like a report card that the Federal Reserve gives the government twice a year. It gives us a glimpse of how of what the Federal Reserve, what the Fed has in mind for our economy. So here is a clip I felt should be highlighted where Senator Semiannual of Arizona expressed her concerns in regards of crypto assets in the U.S. So let's take a look here.
Thank you. On February 23rd, the Fed, the FDIC, and the OCC released another joint statement on crypto assets and liquidity risks posed to banking organizations. It's clear that regulators see undue risk for banks in the current environment and are taking a more conservative approach. Do you believe these risks are inherent to crypto assets and how they behave, or is some of the risks a product of the current regulatory and policy landscape for crypto assets in the U.S.?
So we're seeing really in the last close to a year now, we've seen just a remarkable set of events in the crypto space. Lots of companies collapsing. We've seen massive fraud. We've seen all kinds of things. I think we have to be open to the idea that somewhere in there is technology that can be featured in productive innovation that makes people's lives better. However, in the near term, we see in crypto activity lots of things that suggest that regulated financial institutions should be quite cautious, and that's in doing things in the crypto space. And that's what we've issued 3 or 4 releases to the banks, along with the OCC and the FDIC. The Fed has. And they essentially say, you really need to be careful here. You need to be careful. It's early days with crypto. There isn't the appropriate regulation. We're learning lots about the risks, and there are many of the same risks that run in other parts of the financial system, but without appropriate regulation.
Thank you, Senator Powell.
Thank you.
Thank you, Senator Sinema.
So what she's referencing is the joint statement on liquidity risk to banking organizations resulting from crypto assets, asset market vulnerabilities. So that's the joint statement on liquidity risk to banking organizations resulting from crypto asset market vulnerabilities. This is from the FDIC and the OCC. What is the FDIC?
FDIC. Those 4 little letters stand for Federal Deposit Insurance Corporation, and it's the federal government acting like an insurance company for your bank. Here's a little. In the early 20th century, America experienced something called the Great Depression. During this time, many American banks failed, and millions of people lost not only their jobs, but a lot of their money as well. See, at the time, the banks weren't insured for the money that people deposited, so when the banks went under, people's money went with them. To make sure something like this didn't happen again, the government created the FDIC, which insures bank deposits, even if the bank itself fails. Now, for almost 100 years, the FDIC has been working hand in hand with banks big and small to watch out for people's money. Pretty cool, right? Now, there are limits to how much money the FDIC insures, but as long as you don't have more than $250,000 deposited per person, the FDIC will help keep your money safe. Got more money than that? There are ways to get additional coverage, like opening multiple accounts or a joint account. So you know how your bank and the government work together to protect your money. Pretty powerful for just 4 little letters. Learn more about the FDIC. What's in your wallet?
The OCC charters, regulates, and supervises all national banks and federal savings associations, as well as federal branches and agencies of foreign banks. They pretty much ensure that national banks and federal savings associations operate in a safe and sound manner, provide fair access and to financial services, and treat customers fairly and comply with applicable laws and regulations. So they pretty much, the OCC is here to make sure everything is fair game. And in summary, this document from the FDIC and OCC is basically warning banks about the risks of accepting crypto assets because of their volatile and unpredictable. And they've been advised to keep an eye out for those risks while establishing effective risk management services. So here she's just expressing her concern about that.
Thank you. On February 23rd, the Fed, the FDIC, and the OCC released another joint statement on crypto assets and liquidity risks posed to banking organizations. It's clear that regulators see undue risks for banks in the current environment and are taking a more conservative approach. Do you believe these risks are inherent to crypto assets and how they behave, or is some of the risks a product of the current regulatory and policy landscape for crypto assets in the U.S.?
So we're seeing
Basically,
really in the last
her
close to a year now,
question was a pretty good one. Her question is if Jerome Powell believes that these risks are inherent to crypto assets and how they behave, or some of the risks a product of the current regulatory and policy landscape for crypto assets in the U.S. So basically, is crypto dangerous in general, or is it because of the policies here? And Jerome Powell's answer is pretty much yes and yes. Yes, crypto is a risk to banks, and yes, the policies makes it worse. Let's take a play here.
really in the last close to a year now, we're seeing really in the last close to a year now, we've seen just a remarkable set of events in the crypto space. Lots of companies collapsing. We've seen massive fraud. We've seen all kinds of things. I think we have to be open to the idea that somewhere in there is technology that can be featured in productive innovation that makes people's lives better. However, in the near term, we see in crypto activity lots of things that suggest that regulated financial institutions should be quite cautious, and that's in doing things in the crypto space. And that's what we've issued 3 or 4 releases to the banks, along with the OCC and the FDIC. The Fed has. And they essentially say, you really need to be careful here. You need to be careful. It's early days with crypto. There isn't the appropriate regulation. We're learning lots about the risks, and they are many of the same risks that run in other parts of the financial system, but without appropriate regulation.
Thank you, Senator Powell.
Thank you.
So
Thank you, Senator Sinema.
basically, crypto can be risky because it could go up really quickly and down just as fast. So you can lose a lot of money investing if you're not careful. It also could be risky because there's no guarantee that you can buy and sell them when you want to, which is called a liquidity risk. Cybersecurity threats are also a concern, as digital assets are vulnerable to hacking and other security breaches. However, this lack of regulation can make it hard for investors to know if they're doing something illegal or not. And if the government changes rules and policies around crypto assets, it can have an impact on the value of them and how people use them. So crypto is sort of like dating. Yeah, we come in with our flaws, but how can we know if we're doing something wrong unless it's communicated? Can't read minds. Communication is key. So what's my takeaway from this whole clip? As you can see, ever since this Fed meeting, epic changes has happened. The Federal Reserve has signaled for rate hikes, and that's going to affect entrepreneurship, which is what you're seeing in the Silicone Valley Bank situation. And most of these companies, these startup companies impacted by the situation, is crypto-based startups. So you're going to see some pain bled in to the markets. There has to be a solution. Good thing the Federal Reserve has expressed that they're not against crypto. So all of that talk about crypto is going away and it's a fad, it holds no value, that needs to hush. This is the Federal Reserve talking. What they talk, the markets walk. So they're just looking for the good ones. And they also expressed that they already have similar regulatory framework that they can use to apply for these assets.
The Europeans have a comprehensive framework that's coming into place. The Japanese have a comprehensive framework. Many countries around the world have developed an approach to this sector. Traditionally, in the United States, it's hard for us to come up with those types of regulatory moments. And we have an existing regulatory infrastructure that can be adapted to new products and services. And that is usually the way the United States ends up moving forward with regulating a new kind of product, is to say, is this new kind of product like an existing product that we develop? And in what ways can we therefore regulate it using our existing tools? And in the absence of Congress adapting a different framework, that's the framework we use. So when we think about, in the banking sector, when we think about regulating crypto-related activities, we don't think, we now have a new type of orange we need to have new orange regulation. We say this new orange looks a lot like the oranges that we already eat. And so we think about how to regulate it in that light and modify our rules for any different kinds of risks that are posed by the activity. And in the absence of Congress stepping in with comprehensive regulation, I think that's the approach you'll continue to see here in the United States.
Which is why I advocate for cryptocurrencies that's already international standard compliant. ISO 222 cryptocurrencies. And it's kind of crazy ironic that all of these things are happening the month that the merge is supposed to launch. The merge with ISO 222 and the banks. But anyways, just wanted to review that real quick. It's going to be a bumpy road. In essence, in a nutshell, heavy regulation. They got like the regulation framework already set, you know what I'm saying, set to play. And, they're just picking the winners. They're picking the good ones, like similar to the dot-com bubble, similar to a lot of things. History repeats itself. But just wanted to review that real quick. Do your research. Check me out on the Freedom Culture. I got more content on the way. It's a lot of things going on. A lot of things I'm trying to cover and trying to, you know what I'm saying? But like, comment, subscribe, and get at me. Peace. One.